Good morning, it's Monday the 31st of October. Yes, it's Halloween. And no trickery here, just treats with our weekly roundup of the economic highlights to keep an eye out for in the coming week. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets. We'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today with the release of the Australian retail sales numbers, the Chinese manufacturing PMIs, the German retail sales, and the GDP and inflation figures in the Eurozone. On Tuesday, we'll hear the latest UK manufacturing PMIs, the ISM manufacturing figures in the US, and the JOLTS jobs numbers in the US. On Wednesday, we'll hear the Eurozone's manufacturing PMIs, the ADP employment figures in the US, and also on Wednesday, it's interest rate decision day in the US, something that we'll discuss in more detail in a moment. Yes, it's also interest rate decision day here in the UK on Thursday, and we'll be discussing that also afterwards. Also on Thursday, keep an eye out for the US and UK services PMIs and the factory orders and ISM services PMIs in the US. And to wrap up the week's interest rate announcements, it's Australia's turn on Friday. And again, we'll give our thoughts on this afterwards. Also on Friday, we'll hear the release of the latest German factory orders, the Eurozone's services PMIs, and the unemployment figures in Canada. And finally, to finish the week, the US will release their latest non-farm payroll figures. And that's something we'll also discuss at the end of today's video. And the companies that we'll hear trading updates from this week start today with lows. On Tuesday, oil giant BP released their Q3s, which we'll discuss in more detail straight after this. Also on Tuesday, we'll hear from AIG, Airbnb, Uber, Pfizer and AMD. It's also Q3 results day for Next on Wednesday, and we'll give our thoughts on this in a moment. Companies also reporting on Wednesday include Aston Martin, GSK, Wizz Air, CVS Health and Robinhood. On Thursday, Rolls-Royce report their Q3s and supermarket retailer Sainsbury reports their interim results, both of which we'll discuss in more detail towards the end of today's video. Thursday also hears releases from BT, Coinbase, Dropbox, Kellogg, PayPal, Starbucks and Trainline. And finally on Friday, we'll hear from Mercado Libre and Telefonica. Well, last week the European Central Bank and the Bank of Canada raised interest rates, while the Bank of Japan stuck to its dovish stance and left rates unchanged. This week, the Federal Reserve, the Bank of England and the Reserve Bank of Australia are expected to hike interest rates. But will the statements hint towards a dovish pivot? Well, this week earnings season continues in full swing, with big names releasing figures from the US and the UK. After the disappointment from big tech, could this week's numbers bring better news? We shall see. So let's take a look at this week's bigger stories in more detail. On Tuesday, oil giant BP report Q3 earnings. While oil and gas prices have fallen across the quarter, BP's share price has shown resilience, trading at a 2-year high this month, even as the UK government applied windfall taxes. BP is expected to report a 62% rise in revenue to $58.5 billion, and underlying replacement cost profit, considered its headline figure, expected to soar 86% to $6.2 billion. Question is whether peak price and demand have now been reached, and with a recession looming, how will demand fare going forwards? The multinational retailer Next report their Q3 results on Wednesday. The shares in the company have tumbled around 40% this year, hitting the lowest level since April 2020, the depth of the pandemic. The share price tumbled despite the first half numbers showing that the retailer was performing relatively well. At the end of the summer, the retailer reported a 5% rise in full-year sales. That was thanks to hotter than usual temperatures in June and July. Since then, sales have slowed, prompting Next to downwardly revise full-year sales growth by 1 to 1.5%. and reduced profit guidance to £840 million. However, even this looks a little optimistic given that H1 profits were £401 million. Well, Wednesday is also interest rate decision day over in the US. Well, the market is almost fully pricing in a 75 basis point rate hike this week, which would mark the fourth straight 75 basis point hike. In the September meeting, Federal Reserve Chair Jerome Powell reiterated the Fed's commitment to taming inflation. However, what the Fed suggests is coming next will be of more interest. Recently, expectations have been rising that the Fed will start to slow the pace of rate hikes from December. However, with core inflation still rising, this hasn't been confirmed. Currently, the market is pricing in a 51.5% chance of a 50 basis point hike in December, and that's up from just 24% 1 week ago. Meanwhile, the probability of a 75 basis point hike in the year's final meeting has fallen to 42.5%, down from 75% 1 week ago. Any hints about what could be expected in December will likely drive that market. Interim results from supermarket retailer Sainsbury's, due for release on Thursday, could shed some light on how consumers are holding up amidst the cost of living crisis. The results come as the share price fell to a record low of 168.70 last month. Supermarkets are in a challenging position of attempting to keep prices low whilst also attempting to protect profits and margins as much as possible. An almost impossible feat as energy prices rise and staff wages increase. While demand at Arcos soared across the pandemic, this has since weakened and the grocery business is supporting revenue. Is full-year underlying profit still expected to be £630 to £690 million? Starting to look like it could be at the lower end of that range. Thursday also sees the release of Q3 results from Rolls-Royce. The company's share price has fallen around 40% year to date. That's despite the firm's outlook improving. The revival of international air travel has lifted revenue for the engine maker, but H1 losses of £111 million were a disappointment as higher costs impacted margins and the share price had fallen to a 23-month low by the end of September. Engine flying hours, a closely watched metric, were still just 60% of 2019 levels, although this is expected to improve to 70% by the end of the year, before eventually returning to pre-COVID levels by 2024. While the worst may well be over for Rolls-Royce, the recovery still has a long way to go. Supply chain issues were still being experienced in H1. Investors will be looking for signs that these have eased. To continue the week's interest rate decisions, it's the UK's turn on Thursday, and the pound has been on a bit of a rollercoaster ride amidst the political turmoil infecting the governing party. However, both the pound and the gilt market appear to have stabilised as Rishi Sunak leads the country. The Bank of England is expected to raise interest rates by 75 basis points, although the central bank could go larger and hike rates by 100 basis points. The meeting comes after one of the most chaotic times in British political history, which saw gilt yields surge to over 4% before falling back to 3.7%. With the new budget now not being revealed until the 17th of November, the Bank of England will be taking its monetary policy decision without knowing the government's plans for fiscal policy. There are reports that the Chancellor will look to raise around £50 billion through tax rises and spending cuts. This level of austerity could help the Bank of England ease back on rate hikes, but this won't be known at this meeting. And to cap the week's interest rate decisions off, it's Australia's turn on Friday. Well, the RBA surprised the market in the October meeting with a smaller than expected rate hike of 25 basis points, citing the lag time for rate hikes to take effect in the real economy. Since then, inflation has risen to 7.2% year on year in Q3, and the RBA has continued with the message that there are further rate hikes ahead. Another 25 basis point hike is expected at the November meeting, although some policymakers could argue for 50 basis points. And finally on Friday, the latest non-farm payroll figures are due to be released over in the US. Well, the US economy continued generating jobs at a solid rate in September of 263,000, above expectations of 250,000, but down slightly from 315,000 created in August. In October, job creation is expected to slip again to 200,000, while the unemployment rate forecast to rise to 3.6%, up from 3.5%. So far, the jobs market has shown resilience, even as interest rates have risen. Consumer spending slowed and recession worries have grown. A weaker than expected number could help fuel bets that the Fed may look to slow the pace of rate hikes. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. Well, there are no dividends due out in the FTSE 100, but in the FTSE 250 we'll hear from Ashmore Group, Hilton Food Group, Renishaw, European Opportunities Trust, Edinburgh Investment Trust and GCP Infrastructure Investments. So there you have it. It's a big week for interest rates across several key economies, which will give us a further clue as to how the central banks are viewing the unfolding situation from their bunkers. The UK government has also managed to avoid a Halloween budget, delaying it until November under the guise of getting their feet under the table. But in reality, clearly spooked, yes, a Halloween pun, by the power of the markets to influence political direction. Interesting insight perhaps into just who is pulling the levers of power in our democracy. Is the tail wagging the dog? And just who is the tail and who is the dog? I will leave that with you to ponder that interesting canine conundrum. So, as always, thanks for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So, until next time from all of us here at Atlantic Capital Markets, have yourself a great week.